Refinancing. In this video, we're going to speak about refinancing. What is it? What does it entail? And I've come across this idea of refinancing property around 2014, 2015, which I thought was very exciting, and it is exciting. So what made me quite exciting is I was scrolling on Facebook, one of the property groups on Facebook. I forgot which one was it. And then I came across this picture. I'm looking at it on the computer now. I'll put it on the screen so you see. So basically this picture, it's you buy a house. Then after buying a house, you refinance. Then you get another one. After some time, you refinance. You get the third one. Then you refinance. You get the fourth one. You refinance. You get the fifth one. And it goes on and on and on and on until you get as many houses as you want. Until you get to the point to say, you know what? It's enough now. Let me just rest. Let me give other people a chance to to jump in and get their own properties. So then I decided to go and read, because I love reading. I love knowing what exactly I'm getting myself into. I don't want to get in them, then later on I'll be like, damn, I made a big mistake. I don't want to say that. I want to make sure that when I jump into something, I fully understand. So I went on, I read, and after reading for so long, in 2025, I'm sitting behind the camera and I'm about to share what refinancing is. And then if you're one of those people who wants to be property gurus in the future, it's exciting. The future is exciting, but of course there's pros and cons, and we're going to speak about them in this. So this is how we're going to go. We're going to explain what refinancing is. And we start off the reasons. These are reasons. I hope you can see the reasons why you should refinance. Hey, it looks different. Okay, reasons why you should refinance your property. We don't just refinance because the way there or it exists, and we just jump in. And just to speak, the second one is going to be the refinancing strategies in South Africa and in the USA are slightly different, and at times we're confusing the two. So we're just gonna fix that. And after clearing the air, then we will define it. What is refinancing and how does it look like? Okay, so once we finish with those ones, then you're gonna say steps. Now you know what refinancing is. You know why you should refinance and what steps should you take. What steps should you take to refinance your mortgage, your property? And then after, you need to know, man, you need to know the cost. You need to know the numbers. So how much is it going to cost you? So the cost of refinancing a house. And then of course we have cautions. We are cautioning you. Raho caution a there and there. Hey, stuck on my table. We are cautioning you. What are the caution? Don't just do it, bro. Don't just do it. And then the last one, after getting all that money from refinance your property, what should you do with it? Okay, now let's jump into the video details. Refinancing. Why people refinance? People refinance because they want better interest. For instance, we have new banks that are coming in, new online banks that are coming in. Like for instance, we have Discovery Bank and others. They're endless. And then we also have those that are changing how things are done, like the banking is done. Like for instance, your Capitec, they have now a new home loan office. They finance the properties now, and then those they can give you better interest. Okay, so that's one why people refinance. And then the second one, people are looking for fixed interest. The interests are fluctuating, like now at the moment. Just few days ago, the 29th January, we had a change. Yeah, interest rate. It means your interest went down. Then when they go up, it means they go up. Some people don't like that. I don't like it either, because it causes quite a lot of up and down. Up and down is not cool. I want to be cool. Then the other reason why people refinance, because they want to get equity. We will go into equity just now, or they want to cash out. Equity is, let me break it down now. Equity is the money that you have in your mortgage, so you can have it. That's what they're looking to get. And then the other one, they want to get a second house or maybe investment house. Now we have this house and you stayed in this house and you can afford it. And now let's get the second house, investment house, where we can rent it out so we can get the monies. And one other strange reason is people want to remove others from the mortgages. So let's have this scenario. We've got two brothers, and both of them individually, they cannot afford a mortgage. Once they go to the bank and say, please, we asking for this amount of mortgage, the bank says no, because they're brothers, they trust each other, they've raised well with good values and good everything, and they're like, man, let me support you, let's put our salaries together, so let's buy this property together. It's gonna be your property, you will use your property, but this property, we're buying it together. Once they put their salaries together, the bank says, cool, now you can afford. Then later on in life, because the other one wants to get married, and then the other one also wants to get married, they want to move on with their lives. So what they do is they're removing the other one from the mortgage, then the other one continues with the mortgage, so he can start his own. So that's what happens when they need to remove somebody from the mortgage. Refinancing. What is refinancing? So refinancing, let's say you decided to buy a house whichever year, and you bought a house for 600,000, and you've been paying this house, this original bond, this original mortgage for about 10 years, 15 years. And then as you paid, remember, as you paid, the interest goes down, and then after interest goes down for the first 4 or 5 years, interest are off, then you're now going to start paying off the principal. So as you pay, the amount reduces. When the amount that you owe to the bank reduces, then you're going to start having your own, yours increases. So let's say after 10 to 15 years now, the amount that is yours now, because you've been paying this very, very good every year, and then your equity, your money is now, like, let's say you have about 210,000 rands, which we call it equity. That's the money that you can access. You can then go to the bank and say, I need to have this money, refinance it. And that's what we call refinance, having access to the equity of the money in the bank. So South Africa and USA. Let's start off with US. US mortgages are slightly different from South African mortgages. They are more American mortgages are more closely related to their bond. We've got the 10-year bonds, the 15-year bonds, the 20-year bonds, and the longest, like the 30-year bonds, with the interest. So once you take a mortgage as an American, with whatever bond that you're taking, it means you're going to be sticking to it. You'll be paying that interest. And then if the interest go down, they have like the rate cuts, so you can just move back and refinance. South Africa is slightly different. It's not like that. It's mainly based on affordability. Okay, even when you refinance, we'll speak about this in detail. Even when you refinance as a South African, you still need to afford the mortgage. If you cannot afford the mortgage, the bank will not refinance. So let's get into details about that one. I've read about it from this book over here, Manage Your Money Like a Freaking Adult. So basically she's saying, she likes the numbers, and I love the numbers as well. So here's a simple rule of thumb. Ideally, your monthly housing cost should be between 20 to 28% of your gross income. Gross income, that's the money before tax. Right, yeah, even if you live in Cape Town, where it feels like you can't even buy a decent sized wardrobe for less than R1 billion. Anyway, okay, let's move on. So take your gross income, which is 24,000 in this instance, and you multiply it by 0.2. If we take, let's say, our gross income before tax is 24,000, we'll multiply by 0.2 and will give us 4,800. If we multiply the same amount, 24,000, and we multiply by 0.28%, that's the percentage, so that's 6,720. That's the highest. In that case, you will afford to pay 4,800 for a term, let's say about 20 years. But if the bank sees that, man, you actually cannot afford this, then the bank will extend your loan term from 20 to 30 years, so you can pay less for long, for affordability. And if you want to go and refinance and later on and still struggling, you cannot afford it, the banks will definitely say no. Affordability is quite important in South Africa. So what's the steps? What's the process? Right. For me, I would say the best and first and foremost important step is to speak to your financial advisor. Speak to them. Tell them, put everything in play on the table. Tell them that you want to finance and why you want to finance. Then they will take you through the steps of assessing your financial goals. That's number 2. Why do you want to finance your property? Don't just finance because refinance is there and you want to use it. Why? Why do you want to do it? Is it the reasons that we spoke about at the beginning, or you want to refinance for the sake of refinancing? They will advise you. That's why they are called financial advisor. The next step, you will check your current loan term. Where are you now? You've been paying this property for this long, and what's going to be your settlement penalties? What's the remaining loan balance? All of that, they will do the assessments. You can do the same thing with mortgage originators. They're very good and they come in freely. They're going to need to check your credit score. That's number 4. Credit score, remember, affordability. If your credit score is bad, you got your first loan, mortgage, whatever years, 20 years ago, and then you've been doing bad, and you can't pay, and then that affects your credit score. So they're going to check it. Then they're going to research the lenders. Which one can give me better rates? Which one can give me everything better? Don't think in the property space, guys, you cannot negotiate. You can negotiate as crazy. What options can they give you? Do exactly that. And try to apply for pre-approval. See how much they can give you. And then work out the numbers. Because if numbers don't make sense, man, it's not making sense. Then you will need to put all the necessary documents together. It's more like you're applying for another loan. They will come and do a property valuation. If you bought that property for 600,000, they'll come and check, is it worth 600,000 or is it worth more? Don't think that you've been in that house for whatever long, therefore the property value has went up. Man, property is being stressed during COVID-19 and the change is like this small. It's not this big, it's this small. So they might say it just grew by 100,000 or 200,000. It's not from 600,000 to 900,000. So they'll do property evaluation. Next one, the cost. Because refinancing a property is exactly as buying a new property, you will need to pay some costs. Costs, they go about 5,000 to 7,000. Why is that? Because that bond, now you have you had bond 1, you have bond number 1, mortgage number 1, and let's say bond is more South African. You have bond number 1, then you go, because now it's no longer 600,000 rands. It's no longer 6,000 rands. Now it's 900,000 rand. Then you need to change the bond from that price to the next price. That's why you're going to pay. So they need to take everything to your bond to the master of the High Court to register it, and it comes with the fees that I've mentioned, 5,000 to 700,000. You will also be charged for early settlement. What happens is, if you got a bank that can give you better rates and better everything that you negotiated, let's say you were with Absa forever, and then after some time you learn about Discovery, and Discovery promises to give you better rates, then Discovery will then come in and then will settle your loan, and they'll go and they will register a new one under Discovery and then move all the documentations. That's why you have to pay 5,000 to 7,500 at the master to register. Early settlement, because you settle early. Remember, Absa had plans that from this mortgage we're going to make this much profit. Now you come in early and say, no, I'm closing. Then you're just messing up the business. So they're going to charge you for that. That's why you have to pay early settlement. Let's move over to the next one, caution. We are here, our caution, and right, refinancing. For me, I would say, if that house is a residential home for you, it means you live in it with your wife, with your children, with your mother, with your siblings, I would say do not do it. Because once you refinance, it means you start your mortgage life from scratch. Instead of completing it in the next 10, 15 years, you start 20 years again or 30 years loan again. So instead, I would say when you're there, just get the second one. You know that whatever happens, my children, my mother, my family, they are all safe. Then you can do the two. You know, this one, once you settle it, then you still have that one. And then here we're at peace. That's what I'll do. I don't know about you. What do you guys think? And the other one, the people who are, they've grown a little, you in your 50s, you in your 60s, I would say don't refinance your mortgage. If you refinance your mortgage when you're at that age, let's say the new loan term will be 20. So it means 20 plus 50. Then you will be in your pension age and you're still going to pay mortgage. Or when you're 60 and you refinance to 20 years, you will pay your mortgage until you're 80. Man, when your friends are moving around, they're smoking cigar, bubbles, traveling around the world, just relaxing, stress-free life, you'll be thinking about your next bond repayment. That is a no. That is a no. What do you do with the money? Man, the things that you need to do with the money. Put the money into assets. Buy things that's going to put more assets in under your name, under your portfolio. Pay bad debts. If you have like with the credit card that you need to settle them. So you only have one good debt. Put it into future self. You want to study, go study. You wanna put it into your education for your children. Get things like, for instance, pool. Just do the evaluations, do your research. If I put a pool in my house, how much value will it bring? If it does bring value, sharp. If not, don't do it. And install your solar and see how much it's going to go. So once you sell it, you might sell it for a bigger price. Just do things that put additional, you can put additional granny flat, the back room with your refinance. The back room, the ones that I love, so you can get more money from the rental guys in the back. And then that puts more money into it. Now, the don't. What should you not do with that money? Please. It's not your emergency money. It's not for that. Because you take that money for emergencies and then you're going to pay it back for 20 years. That's a long time of paying that money back. That's the reason why I'm saying do not use it for emergencies like body hospital bills and stuff like that. I know life is important. Things happen. Next one, please do not use that money for home expenses. That now I want to buy a new couch, I want to buy a new TV, a 500 inch TV. I need to move the towel. Please don't use it for home expenses. That from this time on, we're going to eat cheese. Please, it's not for that. Lifestyle creep. You see all your people are traveling next time. Hey, go Bali. And we're like, hey, but what that guy chilling? Hey, go Bali. Then you hear how there's refinance, but refinance, then you want to do say, please, this is not for lifestyle. To keeping up with the Jones and the Johnsons and the Jones. That money is not for that. Please. That money is not for that. That money is not for those. Yep, that's what I have for you, and that's it. That's basically refinance, and I try to break it down into details. This video is lengthy, but I warned you at the beginning. If you enjoyed this video, please hit on the like button, and if you have not subscribed to this group with me, this channel, Property Chat with me, Kato Jizo, please do that. If you enjoyed this video, you will definitely going to enjoy this one. I will see you on the next one. For now, peace, and go get those properties one time. Oh.